Ladies and gentlemen, you're watching India Tonight with me, Sumita Karir, and continuing with the biggest story of the day, that of Liberation Day being seen as a watershed moment in the global economy. Trump's reciprocal tariffs have hit the globe strongly. Calling the tariffs as quote-unquote discounted reciprocal tariffs, Trump said that the United States will charge an import duty of 26% on India and 34% on China. Speaking about India, well, he described tariffs by New Delhi as quote-unquote very, very tough. Trump then went on to allude to the friendship between him and Prime Minister Modi, even as he said that India has not been treating the United States right. As of today, Donald Trump's reciprocal tariffs have sent significant ripples through the global markets, while the United States stock futures plummeted immediately after the announcement. The Dow Jones Industrial Average futures dropped over 1,000 points, S&P 500 futures fell 3.4%, and NASDAQ 100 futures have declined 4.2%. Shares of multinational companies like Nike and Apple dropped each about 7%, while retailers that are reliant on imports such as Five Below and Dollar Tree were hit hard as well. Tech giants, let's also mention them, like Nvidia and Tesla, have also seen declines, reflecting a broader risk-off sentiment. Asian markets, including Japan's Nikkei, is down 4% at one point. It saw sharp declines while European shares opened lower. Well, the threat of retaliatory tariffs from major economies like China and the European Union has heightened fears of a global trade war, pretty much reminiscent of the 1930s Smoot-Hawley Tariff Act, which deepened the Great Depression. So what are going to be the ramifications, repercussions of Donald Trump's tariffs that came into effect, in fact, which were announced late last night? To discuss that and many more angles related to the markets and where will the markets be heading over the next few weeks, I'm now joined by Seth Freeman, Managing Director, Glass Ratner Advisory and Capital Group LLC, and Ajay Bagga, market expert. Thank you very much, Mr. Bagga and Mr. Freeman, for joining us here on ET Now. Appreciate you taking the time out. Let's first ask you this first question, Mr. Freeman. Absolute mayhem that we've seen on the Wall Street. In fact, an immediate response, as it were, was seen in some stocks. We spoke to you earlier in the day as well, and I think, let me ask you that, were you anticipating this sort of a market reaction to come in on Donald Trump's much-loved tariffs?
Well, I was anticipating this general response, and the market this morning here does reflect the futures that we were looking, the future prices we were looking at in the morning in India. And you know, the real thing here is it appears that we are the losers, not the winners, based on what we're seeing in today's market.
Right. Mr. Freeman, Mr. Bagga, let me come to you. When I was speaking to you about an hour and a half back, the Dow Jones was down over 1,100 points in trade, but now it's shed another 400 points to shed over 1,400 points in trade. In fact, according to some estimates, they suggest that, you know, some of these indices are down to 2022 levels. What were investors penciling in, you know, when Donald Trump, for instance, first made the announcement related to tariffs and reciprocal tariffs?
Well, till close of markets yesterday, worse than worst tariffs were not penciled in. So these tariffs are not making America great again. They're making America alone again. As you mentioned, to the protectionist policies of the 1930s, which led to disaster. These tariffs are like that. So it's not America versus India, it's America versus the rest of the world. And look at the language the other global leaders are using. The French president has just said, I urge European companies not to invest in the US when we are being targeted so badly. Why are you going and putting billions of dollars into the US? So a lot of rhetoric going around the world. It is a two-way street. Trump has used it as a one-way street, upending all civilized ways, a mode of diplomatic relations. But now the world is striking back and striking back hard. So that is the trouble. There is an old order which is getting broken without an idea of the new order. It's a 19th century fix that is being put on the 21st century. With a very protectionist kind of an angle. I don't know if it will work. We don't know that. But right now, investors are heading for the exits. That's what we are seeing on the markets.
Right, Mr. Bagga, Mr. Freeman, let me take that point across to you that Mr. Bagga says that investors were not really ready for this kind of a carnage that is being seen on Wall Street as of now. So what was bringing about the optimism? Were investors perhaps thinking that this could be one of Trump's many gambits to get more countries to get aggressive about negotiating trade deals with the United States, or perhaps were they anticipating a rollback?
Well, I agree with Ajay. The market did not price in the extreme level of these tariffs, and that's why we're seeing this reaction now. It's really very hard to say what's going to happen at this moment because it's easy to impute, for example, what raw material prices might cost to import, but it's unknown what consumer behavior is going to be. And we have basically a consumer economy here in the United States. And consumers were already fairly maxed out on consumer credit. And so the kind of growth that's available for people that want to buy things, on extended terms is declined a lot. And now we're going to see prices rise for consumers across the board. And in particular, in price sensitive, people do need cars, but they can defer buying a car or they will buy a cheaper car, as an example. But I will say that the most interesting part about these announcements is that the generic drugs coming from India were exempted. And that would have
Yes.
had a tariff
Yes.
on
Those have been
drugs. I
exempted,
mean,
Mr.
every
Freeman.
drugstore
But let me
here.
ask you that question again. Why were investors optimistic and what were they optimistic about?
Yeah, in terms of where the market rose yesterday, briefly, before it closed, that the tariffs were not going to be as extreme. That there was a hope that maybe it's going to be 10% across the board, not 26%, 27% in India, or 54% on Chinese goods. These are extreme tariffs.
Right, right,
Percent on
right.
Vietnam.
Mr. Freeman,
See,
Mr. Bagga, let me come to you. Now, there was a feeling in India. There was a feeling in India, Mr. Bagga, that considering the positive momentum, there would be a reprieve in India given the trajectory of talks on the bilateral trade agreement. And the government has said that there's going to be a mutually beneficial bilateral trade agreement. So when you see the final outcome of these tariffs, a 27% tariff that's been slapped on Indian goods that will move into the United States, does the glass look half empty or half full?
Even yesterday at the 8 o'clock show with Vikram, I said I'm expecting full reciprocal tariffs on India. There'll be no relationship pricing that we'll get. This is not an administration that does relationship pricing. So, but we are not charging anybody 54 or 56%. That was the laughable thing. So why were the markets complicit? We were expecting some amount of rationality, some amount of self-preservation. We knew that the Trump put has got suspended in this term. The Treasury Secretary has been telling us that the US corporates and the US economy needs a detox from government expenditure. So we were expecting that the Trump put will not be exercised, but we don't know what is the threshold level of Trump. So already markets are 10% down. S&P 500 before the beginning of today's trading was down 10%. NASDAQ was much ahead of the correction territory. Now they are galloping towards a bear market. The Magnificent Seven are already largely in bear market. Tesla is down 46%. And then the Treasury Secretary comes and makes a tongue-in-cheek comment like that you guys have invested in the Mag 7, but we want you to invest in MAGA. So, the markets, if you are rational, you will bolt for the exits. You will say, first, let me get my money out. Then I'll see where, a government where insanity is used as a public policy, you have to really watch out for that. So markets were expecting rationality. That's the brief answer why markets were complacent.
Rather strong words, Mr. Bagga, coming from you. Insanity as a public policy. We do hope that better sense prevails in terms of, how the global economy is going to reel under the pressure of these tariffs in future. But Mr. Freeman, how should investors now brace themselves for the storm that's now brewing in the markets and in global trade as well? And which specific sectors will see monies parked over the next couple of weeks or months, at least till the time this uncertainty is mitigated?
Well, the irony is that this would, under other circumstances, maybe be called a buying opportunity, but this is at best a hold. Or investors routinely buy high and sell low. But I think that this is a wait and see period. But we're also seeing tremendous excitement suddenly, strong excitement for gold. It's amazing how digital currencies have held up, which I don't recommend. But I just think that we have to see, some of these tariffs are not being imposed until April 9th. And maybe this is some device to spend a week for people to come and beg Donald Trump for forgiveness. So I think we're going to have to really wait and see for at least a week or two.
For at least a week or two. And of course, you're stating that investors are going to look at other asset classes like gold, for instance. And Mr. Bagga, we were just having a conversation about an hour back that gold is rather an interesting story that's playing out, and gold is down, which as a matter of fact, like I was stating earlier, has been inching upwards and reaching several past records since these past weeks. So if gold is down as a safe haven bet, then what's the story playing out in the markets, and where are monies moving? Where do you see maximum investments which will be done over the next few days or weeks?
I really didn't understand why gold went down. It went down very sharply around 9:30 US time in the morning. Somebody sold a big amount, and then of course it's clawing back. But I really didn't understand that move, because the whole day gold was making lifetime highs. So the, people were running into gold. People who didn't want to own dollar assets were buying gold, were buying yen, were buying the limited amount of Swiss franc that you can buy, were buying Japanese government bonds. Those were being bought. Some of the US government bonds were being bought, but the dollar exit was being played via the gold. And then gold sold off. I really don't know why that happened. We'll get to know in a couple of days, I'm sure. But overall, there will be safe haven buying, and gold is the best option. Silver has embedded in it a lot of the industrial growth. So today we saw silver going down as much as 6% as well. That's more on the global slowdown fears. So overall, the sentiment globally has turned a little dark. And as Mr. Freeman said, I hope countries will go and negotiate with the US administration and get some clawbacks, get some exclusions, and this tariff rates come down. I think that's the best bet we can do. Meantime, markets are taking some money off the table, but markets were not heavy, nor were markets very heavily short. So hedging was low. The VIX was not very high. So markets were slightly complacent, but markets were not heavy to explain this kind of a sell-off, 4-5%, or 8%, 10% on retail majors or companies like making apparel or shoemakers. That's the Vietnam story coming through. They don't have a supply chain. It's either China or Vietnam, some amount from Mexico. So where will they produce that? And 46% or 54% kind of margins nobody has. So either you stop the business or you pass it to the customer, in which case anyways, you will have to stop selling. So it is a conundrum for corporates. There were tariff war rooms, Sumita, that were set up, but I think none of them worked. We were all very blindsided by the amount of the tariff and the spread of the tariff. I mean, it reached penguins also off the coast of Perth as well as Sydney. So there are three islands of Australia, which were also added on. So I really, that's why I said this was said of the Nixon administration, where you took a public posture of insanity. I'm not insulting anybody. I'm just saying it is a policy. When I read international relations, we were taught this, that at times leaders take very outlandish positions because then it becomes a negotiation tool. I think that's what's working. Markets try to be rational, and that's where they were blindsided.
Right. Mr. Bagga, I'm glad to be getting lessons from you on geopolitics as well, and some of these history lessons aside of markets as well. But Mr. Freeman, when Mr. Bagga talks about all of these geographies that have gotten tariffs imposed, in countries like Vietnam as well, and then there's China as well. Both of these countries have gotten much higher range of tariffs. What do you make of the India story then? Does India seem a better bet to investors? And what about other emerging markets? Do they seem attractive on the back of dollar movement that we are seeing?
For quite some time, Modi's been promoting, made in India, make in India. This could be a real opportunity for India to expand its exports and to compete, or start producing products that have been historically imported from China, and make use of the tariff differential. The thing is, we don't know how long and for how large the tariff differential will be, so which makes investment decisions very difficult. The imports from Vietnam grew strongly because of political issues with China and a move to source manufactured goods from Vietnam versus China. And so it's kind of a sad thing, because U.S. manufacturers move their supply chain to Vietnam in response to general political feelings about China, and now the importers of Vietnam goods are being penalized. In terms of India, Ajay's been at this a long time. He knows the India growth story. That's not going to stop. It's changing over the last 20 years, but the opportunity exists for India. The interesting thing is that manufactured goods, engineered goods, are not that large. I think it's only $18 billion from India, and diamonds are about $12 or $13 billion. So there may be some real impacts on jewelry imports.
Right. So there might be some impact in jewelry imports. But, Mr. Freeman, I was just speaking to a couple of industry experts earlier in the day. They say that India should not just look at the China plus one story, but it needs to build its own manufacturing muscle, whether it is in terms of policies or of course, reducing the number of tariff lines that we have in comparison to some of our competitors. That includes China and Vietnam. But Mr. Bagga, when we talk about, this story that's playing out with respect to China and Vietnam and some of these other geographies, how much of an impact of these tariffs will we be able to mitigate if indeed this is an advantage for India?
Again, I would refer back to Mr. Freeman. If you have to invest, you should have some basis for your business model. If the policy changes in the course of the day, or if the signature doesn't carry any value, so 2020, you had the new USMCA signed, and then you come back and say it's a terrible deal, and you upend it. What about all those who set up factories in Mexico or Canada based on that deal, creating one North America free market? So for Indian entrepreneurs to invest, you really have to see that. And right now, I think we have destroyed deal making. We have destroyed any new business investment, at least for a few months, till there is some clarity. We were clear yesterday that we will not get certainty, but we said at least we will get some steps towards that certainty. I'm sure we are making progress. All countries will go back and try, but the tariff levels were just so high, out of the park, that everybody's got surprised by them. Now for India to deliver on this, one interesting statistic I would like to share with you. In 2020, even in 19, the Chinese trade gap with the US was about $300 billion, little less than that. Today also it's that. But the Chinese trade gap with the global south has become $500 billion. With Europe, it stayed similar at about 200 billion. Where is that $500 billion worth of goods going to? A lot of them are going into Europe and into US as made in XYZ country. I don't want to take country names. I've already upset enough people today in this program, but I would say a lot of that was China surrogate plus one that was happening. That policy was happening. Chinese capital was coming in, Chinese labor was coming in, technology was coming in, and goods were being made and shipped as non-Chinese goods, but they were actually Chinese goods. So Trump is trying to catch that. He's trying to certify that Canada and Mexico say that what is the actual origin of the goods they are making. So, but you can't do it overnight. You have to give it time. I know you're out of time, but he is a man in a rush. But this is what happens if you try to do it too fast.
Yes, Mr. Bagga, Mr. Freeman, thank you very much for joining us. The next few weeks are going to be very, very crucial because all hopes are held by a very thin thread of India negotiating a mutually beneficial bilateral trade agreement. How soon that happens, we'll only have to wait and see. But before that, will Donald Trump be possibly looking at a rollback? Will he be looking at some concessions to certain geographies? India, for example, with whom he says that he has a great relationship. He's spoken about the Prime Minister as well. All of those developments we'll have to closely wait and see, and the impact of those developments. But ladies and gentlemen, it's a wrap on this edition of India Tonight. On that note, hope you liked the show as much as we did putting it together for you. From me and the entire team, goodbye and thank you very much for staying tuned.